and welcome. India's stock markets and economy remained resilient. However, given Trump's fresh tariff threats and him already doubling the tariff on India to 50%, what really are the factors to keep in mind as far as stock markets are concerned? Of course, commodities and currency as well. Well, to decode all of this, I'm joined by senior market expert Ajay Bagga and senior market expert Ambareesh Baliga. Thank you both for your time and thank you for joining us. Today, we heard PM Modi saying the interest of farmers is our top priority and India will never compromise with the interest of its farmers. And very, very strong statement coming in there from Prime Minister Modi. Him also saying that, look, he's ready to pay a personal price. So, a strong message by PM Modi over Trump tariffs. Ajay Bagga, your first thoughts and what really are the factors then to keep in mind as far as markets are concerned?
Yeah, it's become a little complex, the situation. And India, we were expecting, even Trump himself had said there's a beautiful deal coming with India in early June. And we were expecting something good to come out and India to get favorable treatment. Uh, Leave aside any favorable treatment, we are getting punitive penalties being put on India. So these tariffs have now reached a level which becomes a trade embargo rather than even a tariff war, because above 25% itself, most of the exports are not viable. And at 50%, you might as well not do any deals with the US market. So it is a difficult situation. Markets are not so exposed because apart from big textile, few jewelers and the big auto ancillaries who supply into the US market, some chemical companies. Uh, we don't have that much exposure on the listed space on the goods, US goods front. So you're not seeing much of a market reaction. One is the tiredness of the market because this has been going on since 20th January itself. Second, is that the exposure on the listed space is not that massive. But the trouble in India will be there. So, I was talking to a textile CEO yesterday, and he was saying you can take back of the envelope calculation $1 billion of exports of textiles through the value chain. From the semi-finished goods to the finished goods to garmenting will mean 1 lakh jobs. So he said if you are going to put $7-8 billion worth of textiles at risk, you're talking of 7-8 lakh jobs being under threat directly, indirectly another 1 lakh per billion. So that is the risk that we are running. There are no other markets. You can take this on a short-term basis. A lot of friends that I am speaking to are setting up Dubai centers. There are people setting up UK centers now. So there will be transshipment happening. But how much of that will go through remains a question mark.
Right, Ambrish Baliga, do you agree? While India's stock markets and the rupee also opening stronger today and trading stronger throughout the day is showing that look, India's economy, India's stock markets, India's currency is resilient. But having said that, like Mr. Bagga said, it is a difficult situation at the moment. Everyone's really eyeing August 27th, and till then, what sectors should they keep in mind, and what factors really should they be looking out for?
No, like our PM said, I mean, we can't really open up the agriculture and dairy sector for the US as our farmers really can't compete with US, and that be a disaster. And we need to protect that large population. At the same time, we cannot abandon Russia because end of the day, they be the ones who have stood with us all through. And again, when we talk of oil, I mean, if we stop importing oil from Russia and look at our other sources, then I suppose the oil prices will shoot up, and I think it will be negative. I mean, globally, just not for India, because our inflation is going to go up. Yes, because of this, I mean, a couple of sectors will get affected. And let me tell you, I mean, that like tariff of 25% clearly has been unviable for a number of these sectors, including textile. So I would say yesterday's announcement is just a number. And whether you say 50% or 100%, it doesn't really matter because at 25%, if it's unviable, then 50% doesn't make any sense at all. But yes, I mean, like sectors like diamond and jewelry, textiles, a couple of auto ancillaries, a couple of specialty chemical companies. I think they would get affected. But the largest, I think, among these would be textiles, and I think Ajay has just given the numbers. And again, this is one sector where it will be quite difficult to really shift out to possibly other countries where the tariffs are lower. Whereas, like diamond and jewelry, it's much easier to shift out to possibly UAE and export from there and take advantage of the lower tariffs out there. At the same time, you have a couple of auto ancillaries. I mean, which have their own plants in countries where the tariffs are lower. They have their own plants in North America. So some of them could, in fact, be cushioned because of that. So I think it has to see, I mean, the company specific wise as to which are the ones which will get affected. But if you're talking generally, I think textile would be one trade which can get affected to a larger extent.
To a large extent, Ajay Bagga, for those wondering that, look, while all of this tariff talk is playing out, what really should they be looking at in terms of the markets? What really are India's options? And what does this really mean for India-US ties then at the moment? What really are India's options?
Yeah, see, as far as the market goes, we have really underperformed, especially if you look at vis-a-vis other emerging markets. We have really underperformed for the last 12 months, 14 months. So we are reaching a bottom in that way. And once, the market bottoms out, it does very well. When we are reaching those kind of levels, around 23-25% of underperformance, the market starts turning. We have already hit 25% below the MSCI emerging market. So we are near to that sentimentally, and as far as the market's fundamentals go. What is troubling us is that the earnings growth has not come in that fast. Government has been very conservative fiscally, but what is now needed is to cut down GST, cut down taxes, let people consume more, build the domestic consumption economy, because we will get over this US part or this, but nobody will want you to be a very successful exporting nation. That was a 1970s, 1980s kind of story, or the China of 79 to 2020 story. Now nobody wants to give you that space. It's a very protected world, divided into various regions according to protectionism. So you're not going to be very successful on the goods export. You have to build the domestic market. I think that if it gets cleared, right now we are just building the infrastructure, which is very good. Government has been very conservative. That's good, but I would say you can never touch agriculture. You can't tax agriculture. You will not get more revenues from any of those sources. So stop squeezing that lemon, which is already squeezed. The 10 crores who are actually paying the whole taxes in the country, and who are the consuming class, you can say. You have to give them some respect. You don't have money for that. You have to borrow more. You have to have a higher fiscal deficit. That is very clear picture that is emerging. There is no other way but to cut taxes, and including on investors. Now, if there are 23 crore investors registered across mutual fund, stock market, demat, everything, right then to put higher short-term gains, long-term gains when you're already charging STT. That was the covenant that was made with investors, that we are bringing in STT, so we are removing the long-term capital gains. You have STT which is going to 65,000 crores, and on the other side you brought in all kinds of capital gains, which is a bureaucratic reaction function. What you need is political leadership to now come out that this is what we are going to do for the next 5 years, and this is how we are going to unshackle. So massive deregulation, massive cut in taxes. You have to fund it through borrowing, no other option. So smart borrowing from the Japanese, from wherever there is surplus in the world, and focusing more on consumption, continue the infra, no problem there. 11 lakh crores you spend, defense modernization you spend, railways you spend, but consumption has to come up. That message go loud and clear.
Right, Ambareesh Baliga, do you agree domestic consumption really needs a big boost, as well as, of course, the sticking points really, dairy, agriculture, Russian oil? How should India tackle this?
No, like I mentioned earlier, I mean, given a choice of U.S. exports vis-a-vis importing Russian oil, clearly India would be choosing Russian oil, and I think that clarity has come from the PM as well as the government overall. But what I would say is, like this could be a beginning of a change. I mean, when a major event like this happens, it actually shakes you up out of your comfort zone. And like I said, it could be a new beginning because I think the government will have to support to improve the consumption in India. So at least the exports which you are losing, the US exports which you are losing, to a certain extent could be made up by improving consumption in India. Possibly we'll have to look for new markets and new geographies to sell. Yes, I mean, this is not going to happen overnight, but then with a lot of government support, I think that's what the government would have to do, is to support the industry in this time, to at least make this new beginning, look for new markets. And as far as our markets are concerned, I think there's a decent amount of liquidity, and that too, the domestic liquidity. And at the same time, I think finally, if you look at it, Indian economy would be among the brightest spots. I mean, globally. So automatically, your international money also finally flows into those economies and markets which are doing better than the peers. And if you're talking of slightly longer term, next 2 3 years, automatically, I think the international money would continue, would in fact flow into India again.
Right. Lastly, Ajay Bagga, in the near term, for those looking at investment options and saying that, look, what sector should we be looking at amid all of this, amid this volatile global landscape, in a sense, trade landscape, what would you suggest?
No, we have to stay invested. We have to look at the long-term India story. The story is not deteriorating based on one tariff or one country, but you have to have proper asset allocation so that if there is a downturn, there could be a global downturn over the next 2 years, which could be quite deep. So if there is something like that, you should be able to weather it also. So asset allocation, proper asset allocation, and investing for the long term. And for sectors and stocks, nobody better than my dear friend Ambareesh. He can guide on that.
Of course. So lastly, Ambareesh Baliga, your thoughts on the sectors and stocks for all those things that, look, how do we tackle this situation, and, going forward, what should we be looking at?
See, in the short to medium term, the sectors and the stocks which will get affected by the ban, I would say, like on US exports, I think they would get affected. For example, textiles, gems and jewelry, some of the auto ancillaries which don't have an option but to export from India. Like, for example, something like a Bharat Forge, the Class 8 trucks, most of the exports happen from India, although they have a plant in US, but that's aluminum castings plant. So I think one needs to see all these in detail, and then decide as to which are the stocks you should avoid at this point of time, which will get affected by this tariff issue. The sectors which I think do well are the ones which are more India centric, and I think the consumption story, is the one which should actually play out. So your FMCG stocks, consumer durables, which are more dependent on the Indian consumers, I think those are the sectors we look at.
All right. Thank you so much for sharing your thoughts. And of course, follow your independent research and advice. But for now, no tariff jitters for India's stock markets in Rupee as we continue to, of course, track Donald Trump's tariff tantrums, as we call it. Thank you.
Thank you.
Thank you.